through the ground rules as to how today will run. After I've finished, Danny will give us his economic outlook. I know he's not a fan of PowerPoint, so you don't have to worry about that. And he said he'll switch off his camera whilst he's speaking. It's not a technical hitch, it's just the way we're playing it today. I'm sure that many of you will want to put questions to Danny, so please use the hands up function on the Zoom app to get your question heard. But by far the best way is using the chat room function. My team and I will be monitoring it throughout, and we'll look for the more popular themes. Please keep your questions succinct, and please use the Zoom ID tag. If you can't do that, please write your name and company with your question. We'll have everyone on mute as normal, and when you speak, please don't forget to unmute yourself, and most importantly, remute yourself once you've finished. As always, we'll record the webinar, which will be posted on the website after the event. Danny, as it happens, the last physical event we did was with you at the Balcho Kempinski back in March. At that time, I think, myself included, everyone was being somewhat optimistic and hoping that the virus's spread would be contained. That clearly has not been the case. What's the economic damage?
Thank you very much, Alf, and it's a pleasure to be with RBCC today and many friends. As you say, in mid-March at the Kempinski, early March actually, and it was just before the kerfuffle on oil prices and production as well, so we had a double whammy. That period seems like 100 years ago. A lot's changed and a lot will change. What I'm going to do today is 16, 17 minutes on the economic outlook and how it affects business, and 16, 17 minutes on business, corporate case studies. I work with 340 companies. I've been talking with most of them recently as well. I think we've all been more busy in this digital age with webinars and Zooms and so forth. So I think I have a lot to share with you. I'm going to talk about the global economy, Al, for 1 minute, and really, I think there is a view that everything is going to change now. I've written a rather pompous report called The Future of the World, and generally, I think a lot is not going to change. I'm going to summarize it in 30 seconds. There will not be big fundamental changes in the financial markets, the allocation of capital, the functioning of stock markets, the banking system, the tax system, sadly in globalized institutional corruption and capital flight, the way people live, public health systems, sadly, will probably not be massively reformed, and that's needed in the United States and of course in Russia. The nation state is not back. Yes, it's done the funding, but it will not privatize and take over the corporate world. And the business cycle is not over. Many of the companies on this call are publicly quoted companies. Shareholder value will remain key. Now, what will change, of course, is operating factors, work from home and offices, and I'll get to that at the very end of my remarks, and happy to take questions and comments. And as you say, Alf, there's 3 or 4 reports that you and your colleagues have from me, which I'm very happy for you to share with everybody on the call. Coming into this crisis, Russia and Central Europe were in pretty decent shape. Doing business in Russia, despite all the issues and challenges, was relatively good. For top-line sales, profitability, receivables management, and so on, Russia was better than Latin America, Africa, infinitely better than the Middle East, and better than many Asian markets, and could be compared with as good or better than China. Many of my clients, and I'm sure people on this call, were growing in rubles at 8, 10, 12, 14%. And the ruble in the 3 years until March was one of the most stable and strongest of emerging market currencies. And I'm going to come back to that. Of course, things have changed very quickly. GDP in Russia, the consensus, my opinion, is that GDP will fall minus 5.3% this year. Less oil production, COVID, the closure of shops, etc. April and May, catastrophic figures in Russia, just as they were in the rest of the world. And we're seeing a comeback with unlocking. So minus 5.3 or 5 or 6 or 7 this year. The consensus view on a middle case scenario of we get some improvement in Q3 and some improvement in Q4 is that Russia will grow next year plus 3.8%. You'll notice that the decline this year will be deeper than the recovery next year. That applies to Russia and it applies to 135 other countries in the world. We don't get back to pre-crisis GDP until at least the first quarter of 2022 or even the summer of 2022. And that's a given for sure. I also want to quickly, tragically, I'm old enough to remember the 1998 crisis for Russia. And I'll compare this one with that and with 2015. The GDP fall in those three crises, broadly similar. But what makes this different is, of course, the lockdown and the impact on the overall economy. But what's really different is and I can now address inflation for our period, but compare it with those previous crises. Inflation, national, federal in Russia last year was 3 to 4%. There was a view that it would spike up with the stockpiling and consumption this spring, but it didn't. National inflation in Russia in April, May, 3.1. The consensus view in the Russian central bank thinks that national inflation will be 3.2, 3.5, 4% this year. Very similar to last year. Moscow inflation, of course, will be higher. Inflation will be low because of low demand, low consumption, wages, and relatively low energy prices. And of course, I'll come back to that in a moment. So we don't have an inflationary threat in Russia, nor anywhere else in the world for that matter. In 2015, inflation was 16%. In 1998, inflation was 83%. So very different today, and very different on the ruble. The ruble, of course, as I say, was, I think most people on this call will understand it and know it. The ruble was strong relatively the last 3 years, take out a sanctions bump period. Coming into January and February, it was holding up well. And so let's say 65 to 66 to the dollar was the benchmark. Then it collapsed in March, 70, 75 and touched 80. And then since end of March, thanks to the pickup in the global mood, the unlocking, the increasing oil price, the stock market bubble coming back up, we've seen that ruble strengthen again to 75, 70, and this morning it was 70.8 to the dollar. I believe, and the consensus, a strong consensus, is given the central scenario, given the oil price scenario, which I'm going to give you in a moment, then the ruble will fluctuate at 68 to 72 to the dollar and 77 to 80 to the euro, based on a euro-dollar exchange rate 1.08 to 112. And that was the past, and it looks like the future. That's a strong consensus. And as I say, we don't anticipate in that scenario a massive surge back of the virus in Russia or globally. But of course, even this week, we're seeing bumps coming up. And we're also seeing higher rates, of course, substantial ones in India, Brazil, the US, and so forth. But that's the difference. And I think on the ruble, we got the pickup in the global confidence and oil price. But again, I think many people know the big support for the ruble is the Russian central bank. Until January this year, the central bank policy for 2-3 years was to weaken the ruble, to stop it being too strong by selling rubles every day of the week, virtually, the last 2 or 3 years. In February, with the collapse, that stopped, the fiscal rule clicked in, and it was reversed. So the central bank started selling dollars and euros instead of rubles. In addition, and it gets very boring, the central bank received money from its sale of spare bank shares, and it has that money at its disposal to sell on the markets. So the point is, January the 1st this year, the Russian central bank had one program to sell and weaken the ruble. And since then, it's had two programs to sell dollars and euros to protect the ruble. And it's become very clear that that succeeded with the global mood. If you popped along to the Russian central bank this morning and talked with the board of directors and said, what's your biggest worry today about the ruble? Is it too strong or too weak? Then the answer would be, our concern is ruble strength. I think we believe that the Russian central bank will ease off on this support strategy, because if oil reaches 40, 45, 50, then there'll be more strengthening pressure on the ruble. And as I say, then the central bank will ease off. So, conclusion, the ruble will stay within its parameters of where it is now, with 3–4% either side, and that will make it again one of the strongest emerging market currencies. Down 3 to 4% on its medium-term average. Compare that with the Turkish lira -15, the Mexican peso -15, the Brazilian real -18, and so on. So again, I think we have some sort of ruble transparency and relative stability, and compared with other currencies, pretty decent. Compare that with the ruble in 2015, and also in 1998, the ruble fell 300%. So if you see the ruble falling 300%, that would mean today, in today's terms, you would be having a ruble trading to the dollar at about 225. So that really does put things in perspective. So I think inflation, the ruble, and GDP are clear. And I think two lead-ins from the economic numbers to business would be incomes and unemployment. And again, these reflect and mirror global trends. Unemployment, official unemployment in Russia, 4.7 in March. Somebody has got their microphone on, Alf. So, but it's not a big problem for me, but whatever, just as background. So official unemployment was 4.7 at the start of the year, and it's been averaging 4 to 5. By April, it had gone to 5.8%. I fancy this could pick up in May still, although we got the unlocking happening. And at the end of the year, though, inflation will be higher, unemployment will be higher than it was at the start of the year. But these numbers in Russia mask the unofficial unemployment. 10 million Russian people acquire their primary income from the informal economy, and they're not captured in this. And so, like in other markets, in the service sector, waiters, baristas, coffee sellers, shop assistants have become unemployed for weeks and weeks on end. And then, of course, as we get the unlocking, many of them, but not all of them, will go back to work. So I think on the informal side, we're going to see a higher level of unemployment, and that will impact on consumption across Russia for this year and through into next year. I think unemployment and incomes next summer will be lower than they are today when we're having this webinar. So that's the unemployment picture and the income picture. Real wages, that's wages after inflation, were picking up. And by the way, over 5–10 years, have been very volatile in Russia, but when they're good, they're good. And at the start of this year, real wages were plus 5%. So that means inflation 3, real wage 5, 5 plus 3 equals nominal wage of 8, and that was about right. Inevitably now, wages are going to come down. Western companies are not planning to raise salaries by benchmarking with inflation this year or next year. They're planning 0 nominal increases, many of them, not all of you, but many, much more than in the past. And that's a European trend. Many companies will trim wages nominally downwards anyway, and there'll be less working hours and more people being obliged to work part-time and more people let go. On the HR side, I'm seeing very much people not doing drastic measures in Q2, but saying on headcount, salaries and so forth, we will get much more vigorous and arduous and brutal in Q3 and Q4 if we have to. So I think the judgments are going to be made in the coming weeks and months, and very much around September time when people are planning their budgets for next year. Already though, the latest figure for real wages is -2. I fancy for the next 12 months, real wages will be -5. And that means we started this year at +5 and there'll be -5 for the year ahead. That's a big clunk for people to be hit with. There's another indicator, real disposable income, which is not included, 66% of that is wages. And then you have other stuff, entrepreneurial activity, rental activity, and so on. So that's the unemployment picture, that's the income picture, and that takes us downwards, of course. And that's why companies are going to have a sober picture moving forward. This incomes data that I talk about now allows me to go into the business case studies and what's happening. And before I do that, I promised the oil price, and that's necessary. And my view, which is not far from the consensus opinion, runs as follows. This morning, $40 a barrel for Brent. And my figures, by the way, refer to Brent prices. We reckon the average, after a good start to the year, the average this year could be 34 to 38 on an upward trend. By Christmas, if we follow the global pickup scenario, then we could see Brent at 42, 45 plus. And next year, the consensus is $45 to $50 a barrel. And Christmas of 2021 could easily see oil at 50, 53, 55. I think that shale will act as a cap, preventing any sustainable price increases above that. At the start of the year, we were touching 60 to 65, and I think that will be a natural cap for the future. But this trend, of course, is positive for the Russian economy. The Russian economy will tick along with these oil prices, and companies will be able to carve out business moving forward. That does mean, though, as I said, GDP minus 5.3 this year, plus 3.8 next year, following that global down and up that I talked about. The trouble is, ladies and gentlemen, 2022 to 2025, I'm not wildly excited about the global outlook, 2.5% to 3% global GDP. It will take a long time to recover from the shock. And remember, pre-crisis wasn't wildly exciting either. Eurozone 1.5 to 2, and that will be its medium-term average. The UK, going through its psychodrama of Brexit, will be struggling also at plus 1% on a good day. Sadly for Russia, with that oil price in those ballpark figures I gave you, I think medium-term outlook, there is nothing to suggest a growth boom in Russia. The national projects, of course, are in place. They're very important. I've written about them a lot. They might be trimmed this year a little bit because of other costs, but they had a very strong positive impact on pharmaceutical sales last year and continue to do so this year. And my clients in the infrastructure sector had a good start to the year right through to April, May. But medium term, I'm sorry to say, I see the Russian economy ticking along 1.5, 1.7 to 2.2. So 1.5 to 2.2 as an average for several years to come when we get back to a kind of normality. That's the economy finished. And of course, I'll be very happy to take questions, and apologies for the snapshot, but I want to give you the feel. Now I want to move to business and the economic factors I started there, unemployment and incomes, take me to affordability. First off though, Central Europe has had a good crisis, medical and social, and the fiscal support. Generally, Russia has not. I think many people on this call are Russophiles like myself. We like and admire the Russian people. But unfortunately, Russia hasn't had a good crisis. Socially, medically, questionable policies. I think many Russians and international people feel that. And initially, the fiscal support was only 1 to 2% of GDP, compared with 4, 6, 10% across Europe and other markets. So that's holding us back a little bit. And the duration of the crisis, even with the unlocking, means that Russia will be behind the curve by 2, 3, 4, 5 weeks, I think, economically and commercially. But this impact that we see everywhere in the world affects affordability. One of my group members in the food sector said, Danny, we had a great start to the year. Oh, and by the way, a footnote for everybody, January and February for 80% of the companies I work with was great in Russia, good to very good. And that's global as well, across all sectors. And this food company, though, says the shops were open, the supermarkets where we sell, our factories were producing because that was legal to do so, we're priority sector, and our sales zoomed in March and April, and we're still doing so in May. Our volume sales were plus 35%. But our value and price sales were plus 5. 35% volume, 5% value price. And the issue there, of course, the company said, all our clients and customers are buying the cheapest category and the cheapest brands that we sell. So our super premium are struggling, and it's affordability. I've spoken with 120 people in the last 2-3 months, managing directors, many of them in consumer products, but other sectors as well. And there is a consensus of 100% that affordability is key. Promotions and discounts are not going to go away. They represent 45% of sales in FMCG. They represent 60% in cosmetics and 70% plus in some alcohol sales. There was a hope that that could stabilize or come down this year. That won't happen. More and more Russian people will be looking for affordability, good enough to have quality, and promotions and discounts. And I think that's key and critical. This also means that price increases in Russia and in Europe and globally, again, I'm sorry to keep sounding like a parrot, in Russia and the world, price increases. Last year they were mooted low, and this year is going to be repeated. 40% of the companies I work with say no price increases in Russia the next 12 months. Some of them invoice in euros and dollars, by the way. Another 45% say price increases next 12 months, 4, 5, 6%. So inflation plus. And then 10 or 15% say 10% plus, which will be a stretch, and good luck to you. Those who say 10% plus are obviously probably less localized, more impacted by the ruble, even though the ruble's stronger. And now, of course, it does depend on what your budget rate was for the ruble. I have some of my group members who budgeted 65, 66 to the dollar for this year. They did that last autumn, and good luck to them. So yeah, they're down 3, 5, 8% now. That's not the end of the world in this environment. But we have some clients who budgeted 60 to the dollar, ambitiously perhaps. And of course, when that went to 80, that was frightening. And even at 69, 70, it's a bit of a push. So you can understand those people reacting to that. But overall, with weaker demand, the consumer wanting promotions and low inflation, it is very difficult for companies to go to retailers and distributors and say, hey, can we have a big price increase because we want to raise our global profits? The answer is no. Another cliche is, and this is all in inverted commas and cliche, supply chain. Everybody will take their supply chain out of China because the Chinese are horrible, horrible people who give everybody the China flu. That's not going to happen. Supply chains are embedded, and CFOs are going to look at the cost equation. So I do think, though, that some supply chains, European companies especially, will address that. And at the margins, maybe 3, 5, 8% of supply chains may change. And European companies especially will say, well, let's diversify a bit away from China and do it from Central Europe, Turkey, Romania, Bulgaria, Russia, CIS. So I think at the small margins, I think shifts in supply chain could happen. The other big dynamic, of course, that we've had in business is a continuation of an existing trend, e-commerce. Everybody who was well placed in e-commerce and digital internally did better in this crisis than those who were not. On e-commerce, I've seen many of my clients say, Danny, e-commerce represented 3 to 7% of our business going into the crisis. So let's say 5% of our business. It went from 5 to 12, 13% in April. And a couple of my companies say it's stuck around there, but 2 or 3 have also said we went from 5 to 13 and now we're back to 9. And I think that could be a trajectory for many companies. So I think we're going to see a noticeable pickup in e-commerce business on the retail side. That will accelerate the existing trend we had. But it is not going to be the hockey stick of doubling, quintupling e-commerce sales in the future. Remember, by the way, Russian retail e-commerce was nationally 3 to 5 going into the crisis, Moscow 15 to 17. And I think both those numbers will clock up an extra 3-5 percentage points with the crisis. That's a noticeable number. It's a shift in business trends and channels and routes to market. But as I say, it's not the quintupling and the transformation overnight of digital. But digital will remain a key factor for the next 2, 3, 5 years going forward, for sure. I want to finish off shortly, and I've talked about affordability for business, and then I'll wrap up on all the sectors of business. This affordability, though, I've got a couple of clients, I certainly can't name them in public, they're premium in, well, one in chocolate and another in specialized consumer products. Both these managing directors have said to me, Danny, we're at the wrong end of the cycle if we want to be affordable. We started January and February very nicely. And then actually March, as many companies, we survived March quite well. April was going to be a disaster, and it wasn't. And it was better than last year. So May was surely going to be a disaster, and it wasn't. It was slower than March, April this year, but May for these two companies was better than last May. They are predicting a crash in June and July and for the rest of the year because they are premium or super premium, and it doesn't seem sustainable. However, I think there is some logic to suggest, why did that happen for those two companies and what's happening to the Russian consumer. Overall, the consumer will downtrade and want promotions and will feel stressed and strained. However, international travel, did you know, only 7% of Russians travel beyond the CIS, 7 to 10% max. And in a normal year, $50 billion worth of money goes out of the country with tourism. We guess that this year, 50% of that will happen. So that means 50% of 50 is 25. So 25 billion will stay in the country, and that will help the ruble, by the way. And that 25 billion will be either saved or spent. And if it's oligarch money, it'll be spent on premium products, branded products, and so on. And that can explain some of the maintenance of branded sales. A lot of normal Russians, if I can use that term, will not go to Portugal or Turkey. And they will be making discretionary sales, although, of course, savings ratios will rise certainly as people become more conservative. Another factor, of course, is the global automotive industry and in Russia. And presumably car sales, new car sales, branded car sales must be down in the next 12 months in Russia and across Europe. the numbers are bleak at the moment. We are seeing a pickup there, of course, as well, but surely it cannot be sustainable and get back to pre-crisis levels. There's a shift in automotive anyway, globally, car sharing, although of course people might want to travel individually again now with the virus, but young people not buying cars. But if people say, I won't buy a car or take credit to buy a car, then of course they have more relative money to spend on chocolate, detergents, and whatever. So I think the outlook for the car industry and car sales is one factor. And I think another dynamic is the mortgage sector. And I think in my personal experience in Russia, I have a lot of business friends who are Russians in Russia. And then again, I have what I call my normal friends, teachers, nurses, some doctors, night watchmen, and other activities. And they were getting a little bit of the British virus, sorry to misuse that term. This is buying to rent and being absorbed in the property markets. I saw a lot at the end of last year, people snapping up kvartiry in the suburbs of Moscow, Nekrasovka in the Gorod, Kotelniki in the Oblast. I've been there and I've seen tens of thousands of apartments, 30 square meters, 35, 45, selling at 4, 5, 6, 7 million rubles. So, normal people taking out loans, taking out hypotheca to buy and rent or buy and live. That will, I think, again, surely, despite some stimulus side on the mortgages, that must ease off. And that means, once again, the consumer will be saving money, not spending it on that. Admittedly, not getting the rental income, which would go under disposable income numbers. So that's a downside, but broadly saving money. So Russians presumably will spend less on cars, less on mortgages, and therefore have more for disposable income. And during a crisis, of course, people like to treat themselves. Overall, generally for the sectors, pharma and health started January, February well, boomed in the spring, and will stay good for the rest of the year. Consumer products are in two parts. They started January, February well. Those who had their shops and outlets open boomed in March, April, May, and expect a normalization. And at the end of the year, they are expecting to grow 3, 5, 8, 10% for the year. The other part of consumer products, January and February good, but then the spring outlets closed, -50, -70, -80 for the spring. They think they will pick up for the rest of the year, while their friends on the other side of consumer products will go down. Those who are picking up at the end of the year don't think they will catch up on the fall of the spring. So they're expecting to go from -30, -40 to -5, -10 at the end of the year. The B2B sector, the third element, is the toughest: engineering, equipment, machinery. Yes, the national projects will help, but they will be tough, and this is a global trend. And of course, the fourth sector, professional services and the service industry, hotels, restaurants, and so on. I have hotel chains in my group. They're -80 at the moment in Russia, and they hope to have a better end of year with domestic tourism, of course, some international, and they hope to finish -30, -40, -50. My last element of the speech for 3 minutes is work from home and offices and the future. I've written a report on this, which is readily available to everybody. You know the global trends, you know the stories. If 100 has moved over to office working, and they have, I think 15, 20, 25 will stick. Some of my friends and colleagues say, Danny, it could be 30. By the way, what I mean by sticking is not they all stay at home 100%. You know it's going to be very much rotation, but we are going to get a lot more people spending 50% at home, 50% in the office, 4 days in, 1 day out, 3, 2, all the variations you can imagine. Sales and marketing and business development need more office time, client face-to-face time. Administration, human resources, accounting may need more back office and therefore can do work from home. A couple of my clients have said, Danny, We can never do a quarterly end of business working from home. It's impossible. And of course, they've done it now, Q1 and Q2. Things have changed. Another dynamic is management perception of work from home. I have friends who said, Danny, I'm a dinosaur. I disliked work from home, waste of time. You work for our bloody company, you come to the bloody office and work. Yes, we did have work from home, but I didn't like it. Now I've changed my view. It works. I can see that. We'll do more of it. I think also management style. If anybody out there is a little Stalin, you know, vertical command and control management style, that is also going down the toilet, because, you know, you need more flexibility. You're going to have people working from home. So the command and control style of management will evaporate in large part. There are some interesting issues. One of my clients, FMCG, said, Danny, the good people, they can work from home. They can do what they want. I don't need to control them. But we have 15% low performers. I need them in the office. I need to keep an eye on them. The trouble is, if we follow that format, we'll have, you know, all the good people working from home and all the idiots in the office. And very quickly, within about an hour, everybody will know who's in the office and who's not. And so that's clear. There will be less offices. There'll be more empty offices in Moscow the next year, as there will be globally. I don't think it's the end of the offices. People know they need them. But obviously, when rental leases change, there'll be a demand for cost savings. Global CFOs want that. Different kind of office space. The private personal office was dying and looks dead. There's going to be more bigger rooms for office meetings, staff, client areas, and so forth. So this is where we're going to see a lot of the change. I said fundamental change in global dynamics limited, but here in our face, that's clear. My closing sentences, Alf, I get some unusual information and I like to keep to it. By the way, I know a lot about the dynamics in the global sex industry, which I'm not going to share with you now, but offline, if anybody wants to know, there are some wonderful stories. Human beings are the most amusing of creatures. But just to finish off on the offices, offices are critically important and they cannot go away for two reasons. The first reason is globally and in Russia, 25% of people find their husband or wife in the office. Secondly, and counterintuitive to what I just said, 72% of people start their extramarital affair in the office. So offices are very, very important locations. I'm informed even that occasionally people do work in them, and it's not just a center of romance and sex, which of course is a pity. Thank you very much, Alf.
Danny, thank you very much for that very engaging and very interesting and informative talk. I'll just add that I'm one of the 25%, but not one of the 72%.
Well, oh, glad to hear that, Alf, and I'm glad that's your public position.
Great. We've got several questions. I'll just kick off though, and it sort of fits with how you finished off. One of the upsides of the lockdown papers we're reporting was pushing on digital transformation by 5 years. What's your view on that? It sounds like you're sort of in between. Your business as normal to a certain extent, but with some sort of some slight changes.
Yes, I think so. We've conducted a couple of surveys, and we have a digital club, and we've done digital reports. We've analysed this. We've asked people questions. For Russia, I've been a little surprised about the non-acceleration. Companies, 20-30% say no big acceleration, no acceleration. They're more analog. We've had some of our group members like Micro Focus and Orange saying, there is still a big chunk of companies globally and in Russia who are on the analog side and don't want to change. A lot of mid-sized Russian companies, do business the old way. They're changing at the margins. Don't get me wrong, Moscow City, some of the ministries, tax are well known for massive digitalization and being at the forefront. But we've got a chunk of our clientele who say, yeah, we will continue our ongoing plans for digital. And then there's about 25-30% who say we will accelerate it. So that would, definitely, I do hear the stories that, we've done in 6 weeks or, in 6 months, what would take us 3 years. I've heard that as well. I think 5 years might be pushing the boat out a little bit of hubris, but nothing wrong with that. And as I said, so you're right. I think I find myself in a little bit of the middle accelerator side.
Okay, thanks, Danny. We have a question from Stuart Lawson. He'll ask them direct to you.
Hello, Stuart.
Hello, how are you?
Well, thanks. Cup of tea.
Good, excellent. 3 actually, if that's possible. So US elections still on its way. We get headlines, bounties on US soldiers. There's already the Nord Stream and the potential sanctions on that. Is there a head of steam building in the US for incremental US sanctions? And if they come, how badly could they derail your forecasts? Secondly, we were hearing the story of FDI and productivity, that to get out of our stagnation, what we needed was to attract foreign direct investment. Calvi's still in house arrest, and there have been various other somewhat negative developments, and of course the environment generally. What's your view of whether or not FDI is on the horizon? And as you know, I'm on the board of Skolkovo Ventures, but I'd be interested in your view of where you think that whole Skolkovo project is going, and the impact on venture capital of some other recent arrests, which seem to put a damper on the concept of state investment in venture capital. Sorry, a bit of a mouthful.
No, thank you. I'll try and do my best. I'll take number 2 first, FDI, because I think it's fairly simple. I do like to try and talk up Russia. I try and, the bottle is half full, not half empty. I think it's been a good argument for many years, a valid one. But on the FDI side, it's a stretch, yes. I think a lot of companies now, they're prioritizing. Central Europe and Turkey might do well. I think one point is, where do you stick your FDI now? China is, not so fashionable as well, but companies will invest in China. But I think the FDI outlook, the pure new clean FDI manufacturing in Russia, as we know, has been limited in recent years. Even in the good years, it was very much energy orientated and some big spikes thanks to 1 or 2 famous deals that went on. So I'm not very upbeat on the FDI side. The good news, I think, though, is that companies who are already in Russia are reinvesting in Russia. That's a positive. And, a lot of our clients until the crisis were not built, P&G weren't planning $100 million detergent plant in Moscow Oblast, but many companies were thinking of warehousing, logistics centers, regional manufacturing, upgrading existing sites, and so on. Also, I've seen a little bit of below the radar M&A activity pre-crisis the last couple of years. Western companies buying up their distributors, buying up some clients, even in pharmaceutical, private family-owned companies, Central Europe, Austria, Germany, Switzerland, buying in, not the 100 million, but 3, 5, 10, 20 million. So, a little bit of positives there as well. But generally, it's, in this period, it's tough to say, go and stick 50 million in a plant in Russia, unless there's, some intrinsic sectoral corporate reason to do so. The US elections, that's a quagmire, of course. I know that Trump is behind on the polls, but as we all know, it's the Electoral College that counts. He's behind there as well, but he's down in Florida and Michigan by 3 to 4%, not 10 to 14. So I think it might, on the Electoral College side, be a little bit closer than optimists are thinking. I think the global political risk, the worst country in the world is the United States of America. I said last year it's a dysfunctional political civil war, and it remains so. I worry a great deal politically and socially and domestically before the recent racial incidents occurred, and one wonders where Congress and the institutions will go. I do think things would improve under Biden. However, as you know, Stuart, and most people on this call, the Congress, Senate, and the Congress don't love Russia as a majority. Broadly, I'll stick my neck out, though. There's so much going on there. I think at the heart of it, Trump probably wouldn't want to sign off on any new sanctions. My hunch is that if any new US sanctions occur, they would be incremental. They would be directed more at the domestic economy, because we know, of course, the brouhaha that occurred when they put sanctions on Deripaska, that had international market implications. So I think this time, I think it's less than 50%, but it's an unknown there given US politics. I think personally it's less than 50% because they're going to get sucked into so much else. However, if Russia gives them cause for concern and, manifestations of hacking that can be traced, etc., it could spiral. I accept that. But then I think there won't be, massive sanctions on SWIFT or anything like that. And I think it would be incremental, directed probably at something domestic, and would be manageable. On Skolkovo, I think, this whole industry, management education, call it what you will, R&D at the forefront of technology, is going to be stressed and strained. Where the money comes from domestically to Skolkovo and other organizations like it will be stressed and strained. One paradigm is that's where money must go. Yes, and climate change, we know there are many good things where money should go, but I fancy the purse strings are going to be held tight by governments, by corporations, and so on. And just related to that, and I've spoken at Skolkovo as a guest, of course, I think the concern for Russia and other markets, this is a global feature again, is the brain drain. We all know about it, it's a cliche. Sadly, gifted, quality Russian people, young ones especially, don't want to work or set up a business in Russia, nor in Bulgaria, nor Romania, nor China, etc., etc. And this is a drain on the economy. I think the intention of Skolkovo was good, but it faces increased challenges. Sorry, I ramble a bit. That's the best I can do.
Thank you very much. You didn't ramble.
Thank you.
Sorry.
Yeah,
sorry, I was on mute there. Before we go to the next question, just like to remind the audience, it's a great opportunity to ask Danny any questions you want. So please post your questions or put the blue hand up. We have a question from London, and you've sort of touched upon it, but what, in your view, what's the impact COVID is going to have on Russian national projects?
Yeah, thank you. Well, a little bit of background on them first, and then to answer the question. We all know that in 18 and part of 19, the national projects weren't going too well, hence why there was a flurry of activity, maybe a change of government at the end of 19, and so on. As I say, the national projects, though, for health and pharma really did kick in 2019, oncology and cardiology especially, but broadly other sectors too. I can't name any names, but pharma companies have been growing in 19 at +30, +40, +50% in rubles plus, and very profitably. Oh, I should have said that at the start. Historically, and even into the start of this year, and the people I've spoken with in recent weeks, profitability in the Russian market remains good. It used to be super good years ago. Our surveys show it remains good plus, and the stories I've had recently, including yesterday, one of our group members, profitability reasonably good. So the pharma side for the national projects really kicked in. Then overall, at the end of last year, the last quarter, and the first 2 months of this year, they also boomed, and the numbers for government expenditure, etc., shot up you know, big double digits, even triple digits in some sectors. So the national projects were kicking off. As I say, one of my group members is in road construction, which is the sweet spot for national projects, and they are growing triple digit. The construction of roads continued for this company through the mild January, February, March, April period. They followed health guidance rules and were still growing. So that's the background. And they continue, of course, in theory to 2024, and they will be a positive for the economy. This is a plus side in the background. Russia had built up the reserves to do this. You could argue maybe it was a bit too little too late, and poor implementation, that's another story. To your question though, we don't know. And with the fall in inflation, or the non-rise in inflation, with the relative strength of a ruble, less money needed to protect the ruble, etc. But social spending, and in June, more fiscal support was announced. The question will be, how much of that fiscal support will actually be spent? And that applies to the UK and the US as well. You know, loan guarantees, tax deferrals. Tax deferrals means, well, it's deferred and you get the money later. A loan means, well, you get paid later or not, as we will see. So I think there will be new increased pressure on the national projects, and I fancy they could be trimmed. My personal hunch is not that they will be emasculated or shrunk or crushed, far from it, because they're necessary and they're part of the overall fiscal stimulus. In the pharma sector, for example, you know, you'd presume, well, there's going to be not much change there. Pharma executives take the view that, yeah, we'll be protected, we'll be looked after, it will continue, and I agree. But I think also in that sector, there's a concern that, well, maybe the government's going to come along and say, you pharma boys are getting a nice deal in these national projects, and we'd like to have a discussion with you about the pricing that we're offering you. And we'd like to change that and reduce the prices. So I could see some tweaking there. My personal point would be that if you know the national projects, you know the focus on infrastructure, and that's fine. Russia needs infrastructure. And within the infrastructure, there's a massive focus on road construction. And once again, Russia needs good roads. However, everybody on this call knows that investment in Russia into infrastructure and roads is below par efficiency. And not all of the money that is directed to projects actually ends up in the road or in the projects, and some of that money is diverted. So it may not be the most effective way of spending money. And for Russia overall, you know, this is where real savings could be made. I think I've made myself clear.
Great. Thanks, Danny. Yeah, very clear. Danny, I've got a very straightforward question for you. After that, if we don't have any more questions, so last opportunity, Danny, I'll ask you just to make some final comments, if you would. But my question is very much selfish interest. I'm just interested, how do you see the logistics sector doing at the moment? I've heard various things, and I'd just like to hear your take on it.
Thank you very much. Yeah, very much. That's a good one for me. Pre-crisis, distribution logistics was changing dynamically anyway. I think all of the companies on this call and the companies I work with, you had the demise or the reduction of kiosks and small-scale mom-and-pop stores for many reasons that we know. And then with e-commerce and digitalization, you didn't need standard distributors. You know, your big old-fashioned Russian distributor, Ivan. By the way, I always think of a Russian distributor called Ivan and weighing, you know, 200 kilos. But apologies to Russian distributors. But, you know, with the order being clicked on the phone, going to your website and completion center, you didn't need a lot of the old-style distribution services. However, you need to get your product from your website and warehouse to the consumer, be it a bag of cement or toothpaste or cosmetics. So you do need logistics. So I think the future of the Pochta, the postal services globally and in Russia, if they can get their act together, there's massive opportunities here. And as we all know, the last kilometre or the last half kilometre is key critical anywhere, and in Moscow. So I think the whole shape of distribution in Russia was changing and is changing, and it will be accelerated by this. But the downside for logistics, of course, is, I talked about one element there which is positive for them. Logistics overall are suffering, from the general climate at the moment. If they're B2B corporate clients, the corporates, as I said, B2B is not so very good in Russia and elsewhere. So the B2B sales are not happening. Therefore, you don't need the logistics companies to ship the products from one factory to a customer or elsewhere. Also, global trade, European and Russian trade were trending downwards anyway. There's going to be less oil shipped and move around, we know that. But global trade, Chinese investment and so on, and to the point Stuart made there, FDI, we had some Chinese real money arriving. How much of it was real is questionable, and some of that will be held back now. But I think trade overall will be down this year -10 to -13%. And that will be reflected in Russia, the supply chains and so on. So I think that is also, B2B generally down, global trade down. This affects the logistics companies, and their businesses are suffering as well as anybody else's. And they have to adapt very much, to my first point, to the e-commerce developments that are going on, and they are doing so.
Great, thanks for that. It might be of interest to you. 2 years ago, Russia Post joined the RBCC in the UK. I think they were dipping their toe into the parcel distribution market, but I think they've already sort of rethought that. But I need to check where that's gone. Danny, we have one more question. It's quite a big one. We are running out of time, so ask you to be succinct. What effect will Brexit have on all of this?
Brexit, well, I don't think will have much impact on Russia directly in business and trade. I think we all know that the element of, yes, there's British business going on, a couple of 200-300 years in Russia, but it's not key critical for Russia, it's not key critical for Britain. But we want it to continue, we want it to grow, and there are some nice niche sectors and so forth. But I think overall, Brexit inevitably, even though the numbers now can be hidden under COVID, which the government will surely do, it must hold back any British economic recovery by 6, 9, 15, 18 months. It must trim off 1% of GDP growth, etc. Anybody can try and crunch the numbers. I think geopolitically, it's a truism, it's no deep analysis here. The cliche is that Russia wants to see a more diverse and distinct and separate Europe, and Brexit has allowed that. So if you're looking in stereotypical geopolitical terms, then Russia, I'm not saying they do, but this could be one interpretation, then that could fit in with that model. I think it will impact more on, some of the key markets in Europe, but I think increasingly the Europeans are, looking at scenarios of, the hard Brexit would be the central scenario today. They may pull a rabbit out of the hat, in October, November, who knows, or on December the 31st. But, if Brexit was a tragedy, in December, then it's a tragic farce now, splitting away from our key global trading partner and looking at more trade with those cuddly pandas in China or that nice sweet man, Mr. Trump in America, looks very counterintuitive to me. It's very, very sad. Yeah, not good. Not good for everybody, but as I said, I don't think a big direct impact on the Russian economy or the Russian business environment. And the good news is the British companies who are doing it and are committed will stay so.
Great. Danny, thank you very much. That's all we have time for, unfortunately. As always,
pleasure.
Before, I think the word sums it up: engaging and fascinating insight. Your reports are available.
Yeah, your colleagues have them, and so
Yes.
people can go to your colleagues or to me, and they're available.
For the audience, if anyone's interested in Danny's contact details, of course, they're on the website, or get in contact with us and we will connect you. But Danny, thank you again. Wonderful talk. Thank you, the audience, for participating again. And of course, I'd like to thank our sponsors, Raven Property Group, for making this webinar series possible. Next week, please join us on the 8th of July for a talk on financial aspects of the crisis with one of our members, DCART. Once again, thank you very much. Have a great day. Don't forget to vote in the referendum if you haven't already done so, if you're in Russia. And see you next week. Thank you very much.
Thank you, Alf. All the best to everybody.
Thank you, Danny. Cheers.
Bye-bye.
Pleasure as always.
Thank you.